All right, so the Federal Reserve is having their upcoming meeting on July 26th and 27th. And in this meeting, they're going to talk about everything relating to the economy, how they're going to combat inflation, what's going on with the housing market, and what their previous efforts have done to combat rising inflation. Now, many people are saying that the worst is over for the stock market, for crypto, that the bottom is already in. And there's another side that's saying there's still more pain to come. And I want to just quickly talk about in today's video what we already know and can expect from this upcoming meeting and what the impacts of their decisions are going to be on the stock market, on crypto, on jobs, on mortgages, and everything else that affects our personal finances in the market. So let's talk about it. First thing is pretty obvious. Meeting taking place on July 26th and 27th. And Jerome Powell, in this meeting, we can already see, according to Fed futures rates, that the probability that there's going to be a 75 basis point increase is 80.5%. Many Fed officials have already come out and said that we're not doing a 100 basis point increase. That's too dramatic. We're going to stick to 75. And according to the data, these Fed futures rates, it looks next to guaranteed that we're going to see a 75 basis point increase. And why is this important for our money? Well, what it means is that they're no longer going to be increasing rates at a faster rate. They're not taking a more aggressive stance to combat inflation. They're saying, look, we had a 75 basis point increase last month. We're going to do another one this month. And then after that, according to all the futures rates, which you can track, September, November, December, you could see all of them. According to all of these, it seems like they're going to start tapering that back down a bit. Next month, we're potentially going to see a 50 to a 25 basis point increase, and it's going to continue to drop lower and lower. So we're not expecting to see another 75 basis point increase in 2022 at all. So that's the good news. The good news is that it looks like the worst is in because they're no longer needing to raise interest rates at as fast of a rate. And why are they starting to slow this down? Well, we're already starting to see, first of all, gas prices are coming down significantly. We're starting to see that gas prices reached peak in June when inflation was at 9.1% according to the CPI data. We're also seeing that in terms of mortgage rates are increasing dramatically. Last year at this time, it was around 2-3%. Now it's well over 5%. So we're seeing that all of this is pointing to the fact that what the Federal Reserve has done with interest rates is, not good if you're looking to buy a house right now, but it's helping to stabilize the economy, helping to combat rising inflation. So we're already seeing that in terms of, like I said, gas prices, mortgages, and we're seeing that what they have done in the last couple of months is working. Other thing that's happening is that we're also seeing in terms of jobs, which is good news. And in terms of jobs, we haven't seen a dramatic drop-off. We haven't seen that employers are no longer hiring people. There's less jobs. We're actually seeing that the job economy is still pretty strong. We're seeing that there's increases month over month when it wasn't really expected. So that is why we're expected to see a 75 basis point increase. When we're looking at, is the bottom of the market in for stocks and for crypto, or are we going to continue to see more pain? I would argue that we have already seen the bottom of the market. Like I've said, gas prices are starting to come back down. We've already seen massive rate increases to combat inflation, and we're starting to see that mortgage rates are increasing as well. So as a result of this, it seems like the market has already factored this in, and you got to remember that the stock market and crypto are not indicators of where the economy currently is. They're more indicators as to where the market is going, what people predict in the future. Markets are always leading indicators for the economy, and so what it appears is that, yes, max pain was in June, like May, June, July, but remember, stock market and crypto are always leading indicators to what is going on in the economy. So yes, we saw that massive drop all the way down, where the S&P 500 was down 20% year to date in about the middle of June. Now it's down 16.9% year to date as of end of July. So all of this is looking better. Federal Reserve starting to increase rates at a slower rate. We're seeing that gas prices are starting to come back down. We're seeing that jobs are continuing to increase. And we're also seeing that mortgage rates, which isn't good if you're looking to buy a house, like I said, but mortgage rates are increasing as well. So all the policies they're putting in place would say that the markets have already bottomed out because markets are leading indicators as to what is going on in the economy. So anyways, that's what's really been going on with the Federal Reserve. We have their upcoming meeting on July 26th and 27th, but we shouldn't really see any surprises in this meeting because we already know what to expect from the Federal Reserve in terms of interest rates. It's more going to be just a confirmation as to what their outlook is over the next few months. Do they have plans of continuing a 75 basis point increase, or do they have plans of slowing and starting to taper that off? But anyways, right now, me personally, I've been continuing to buy stocks, crypto, dollar cost average. I don't think we're going to see much lower prices for the remainder of 2022. It looks like the worst is in, but remember, there's always the possibility of a black swan event, especially for crypto. There's always a possibility that inflation continues to rise, but what it looks like the bottom is already in and the worst is over. Let me know your thoughts. Just doing more of a chill video, just talking about the economy, stock market, crypto. I hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.